My Chase loan. Are you guys familiar with this? I got this letter in the mail from my bank, Chase Bank. It says, "Dear Adam, you can get started on planning your next vacation, making improvements to your home, or have the added flexibility you want for unplanned expenses. You already have the credit you need." And it says, "At a lower fixed APR with my Chase loan." Now, most people I don't think are familiar with this. To me, I'm like, whoa, how am I just hearing about this? Now, it might be fairly new. That said, this is money, 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 money. And ultimately, you get to access your credit that you already have access to at a lower rate. It says it's easy because it's yours with no credit check or application required. You can borrow from available credit on your, for me in particular, my Chase Freedom Unlimited credit card, and you'll save with the rate that's lower than your standard purchase APR. And it says you'll save with no fees, no origination or early payoff fees, find terms that work for you. So choose a loan amount minimum of $500 and a duration that fits your plans and budget. You'll have a simple fixed monthly payment with no surprises. And then it says have your funds deposited into your bank account in as little as 1 to 2 business days. My friends, like what why aren't more people talking about this? So if you have a credit card with Chase, well, you basically will just have access to your credit line that you already have on that credit card, but at a lower flexible fixed rate, right? And then that money is just going to be deposited right into my account, and there's no early payoff fees. Do you guys do you, like, I don't think enough people get this or talking about this. No credit check, no application, or no new account to manage. It's aligned with your current credit card that you already have. In my case, it's my Freedom Unlimited card. It says set up your loan in 3 simple steps. First, you choose your loan amount. $500 is the minimum amount. So request the loan amount. Let's say $12,000. The maximum amount you can do is $16,000 because that's what's left that's available on your credit card. Remember, it's based on your credit card. Number two, you're going to choose a payment duration based on your loan amount. So either you're going to say, okay, I want this to be for 12 months, 18 months, or 24 months. And whatever one, if it's obviously 24 months, a longer period of time, your payments are going to be a little less. It's $553. Whereas if it's 12 months, then your payments are going to be $1,043. The fixed APR is obviously going to be higher for the more the longer extended period of time that you have to make the payments in full. And then you receive those funds directly in your bank account. It's that simple. Now, again, I don't really understand why more people aren't talking about this. I think it might be a game changer for those of you out there who pretty much know you just need access to like some cash for a short period of time, and you know that you can pay this back in this duration. The APR, at least what I'm looking at on this letter. Now I got this letter. It's the date. The amount might be lower. It might be higher because the date, it's not the same date. But when I had gotten this letter, I've saved it since. It was November, and it says as low as 7.49%. And then it says your loan duration is up to 36 months, which I think even on that screen we saw a moment ago, I don't even think it said 36 months. And then it says your credit limit as of, and I mean, I could have taken out over $20,000. So I literally could have had access to $20,000 with as low as about a 7.49% interest, that I would have just had to make monthly payments, stretched for up to 3 years. If I'm going to use a credit card on like these same exact things, like if you're going to use a credit card on something that the interest and you're not going to pay it back in full, this is the key part. If you're not going to pay it back and the interest part is going to play a role because it's going to the balance is going to carry over, well, it might make sense to use the My Chase loan credit, like the access to the credit that you would have access to on your credit card, instead of using the credit card outright. just because of the lower interest that you're going to pay on this. Because on your credit card, I don't know what I don't even know what it is right now. Maybe it's 14. It might be twice as much, or maybe even 3 times as much as this 7.49%. It could be 15%. It could be in the 20s, right? Using your credit card. Whereas you just do this, you have the money come from your credit card, and it'll be directly deposited into your checking account. Now, of course, you won't have access to the same amount of money on your credit card. So once you take that money out from your credit card using this line of credit, it's now taken away from your credit card. So now that credit card has however much is left on it, and then you'll have that money in your checking account. So the key thing here is to remember with the whole utilization, this will influence and impact your credit card, your credit utilization. And technically, we want to keep it beneath 30%, although you really want to keep it beneath 10%. 30% is what like the banks and whatnot, they don't want to see it over 30%. But you really want to keep it under 10%. So if you do take this, offer, my Chase loan seems to be, it sounds like it's a good idea. It might be tempting to spend more than you need to, especially if you're like, well, I got the cash. It's not really yours. Remember, it's coming from your credit card. If you don't have the discipline, I don't recommend it then. But if you can be disciplined and you understand that this is money from your credit card, you're going to have to pay it back. Those monthly payments are there. Yes, you might be like, well, I'm just going to use this and never use my credit cards anymore. And like, yeah, you're going to have access to a lower interest. But again, the key is to we don't want to pay interest at all. So you want to pay it in full. This could be effective for like emergency situations, but also things that you would be using your credit card for that's going to have a balance and it's going to carry over where you'd be paying interest on it. Well, this might just be a smarter decision because your interest is going to be cut in half, or if not more. The only downfall, like I said, is it could be tempting to go and splurge and ball out because you're like, hey, I got another $10,000 in my credit card, my checking account now. Not really. That's money you got to pay back. Yeah. So when it's all said and done, I do think this sounds like it's a good opportunity. I don't really need cash right now, but even, I don't really want to share this idea. It's like when people say like, well, can you take out a credit card to pay off, use a credit card to pay off another credit card? Like, I don't really recommend that. But if there was a final, like a worst case scenario, this approach might be effective because again, you get the lower APR loan, like the interest on this, than you would on like any credit card that you might have a 20% or whatever on it. So if hey, I got a contract coming, this agreement, whatever, a client, something big, you got money coming in on a certain date, you don't have access to that right now, you could technically take out money from the My Chase loan approach, apply it towards that other credit card, maybe Capital One or someone else, wipe out that credit card balance in full, get the interest, including that interest that would have been 21 or higher, whatever, completely wiped out, and now you just have to pay this back, which it's set up on a monthly payment system, but also at lower interest. So, hey, again, it would take discipline. Got to be motivated. Definitely got to make sure you're staying on top of your payments. And again, it's not always the best approach. I don't always recommend it. I haven't necessarily done this myself to apply it towards other credit cards and stuff, mainly because I'm one, new to this, but two, I don't really have much other credit card bills. But if I did, this might be a strategy I would potentially consider applying and implementing. So I'm going to wrap this up. Kind of dragged on a little bit longer than I was planning, but really, I'm kind of excited to give this a shot. When I do, I will keep you guys in the loop. I mean, I might even do it for a small, like $1,000 or $2,000. I think I said $500 was the least amount you could take out. So maybe I'll do it for like $2,000 or something and just kind of test the flow of things, see how fluid it works. If, the money does appear on my checking account that quickly. See if there's I don't know if this really will have. I don't think it's going to be considered. They said it's coming from from that credit card you have. So I don't think it would be considered like a new line of credit or anything like that, especially since you don't have to do any new applications, no credit check. So probably won't have any other impact, really kind of in any other way, I don't think, in terms of your credit score. So it really is just a matter of you having access to this money at a lower APR. That's the benefit there. If you try to take that money out of cash or out of ATM, they are going to be that interest you're paying on it's much higher. So it definitely all adds up. Anyway, I'm gonna wrap it up there. I think this sounds like not a bad move with Chase. It might get some people to slip a little bit, so I can see why they might have been like, you know what, let's try to see how many people we can get to slip on this and can end up paying us more money. But they also might have been like, let's give people an opportunity to have access to their own line of credit, their own cash technically, but at a lower rate, and see if they're going to try to actually maximize that line of credit and use it. This might just be a testing period. I'm not really sure what Chase is doing with it. Hopefully it sticks around though, because it does seem like something I think a lot of people could benefit from. So what do you guys think? Do you think this is something you would give a shot, like try out? Are you curious? Have you tried it? If so, what was your experience like? Comment down below. I would love to know, and I'm sure other people could benefit from your thoughts as well. So anyway, much appreciation for watching. Like I said, I gotta keep it moving, but I'll see you in the next video. Peace.